The Organization of Petroleum Exporting Countries and its allies met for about 11 minutes virtually yesterday, and key alliance members approved adding 137,000 barrels of oil a day, a modest increase, to the market starting in October. Let's get more from Rebecca Babin, Senior Energy Trader at CIBC Private Wealth. Rebecca, thanks very much for giving us the time today.
Hey, Andrew, how are you?
Not too bad, thanks. So this is seen as a pretty modest increase by OPEC Plus, I think.
Yes, so I think you're right. It's certainly not as bad as it could have been. If we just roll back the clock 1 month, they added about 550,000 barrels in August. So this is obviously a deceleration of their production cut unwinds. However, this is kind of a little bit of a signal that the market is taking fairly seriously, and that is that OPEC Plus is going to continue to go after market share as non-OPEC supply has continued to accelerate. And Saudi Arabia in particular is going to try to regain some control within the group. They really shouldered a massive part of the burden of the cuts that have taken place over the last several years. And as some of the members haven't been complying with their quotas, this has kind of incentivized Saudi Arabia to say, you know what? We're going to bring these barrels back, and we're going to be the ones to take advantage of being able to continue to increase our supply, even as some of these other countries are getting tapped out. So it is a small number, 137,000 barrels, but it's part of a larger unwind that could take place over the next several months of 1.6 million barrels. The reaction today is really kind of a flat line or a slight positive, because this was rumored to be happening last week. And I think the market was down around 3% in anticipation. So there's this push-pull, and I think the signal is strong that OPEC Plus is going to continue to bring barrels back. And although, this isn't being absorbed kind of as a negative right now, if we start to see these inventory builds come in the fourth quarter, I think the commodity will feel some pressure from this decision.
So OPEC Plus's game, and the Saudis in particular, they are worried about market share. That perennial worry for them. I mean, they're thinking decades ahead, I guess.
So I think they are thinking over the long term, and that's a key point. I'm glad you mentioned it, because although they have kind of ceded market share over the past several years, let's call it 4 years, as we look forward into kind of the latter half of 26 and into 27, non-OPEC supply growth is going to moderate. This year, we're actually expecting 1.6 million barrels of non-OPEC supply to come to the market. That's a really large number, and it's not shale. It's coming from Brazil. It's coming from Guyana. It's coming from these other places. And so they are losing market share to non-OPEC supply if they continue to keep their cuts kind of ongoing. But as we go into the latter half of 26 and into 27, that supply growth outside of OPEC really starts to moderate. And if we've cleared this spare capacity, that is the barrels that OPEC Plus has the ability to produce but is not, if we have brought those barrels back and we get to 27 and non-OPEC supply has moderated, we're looking at what is a truly tighter market, and it gives the commodity a lot more room to run. Spare capacity, those barrels that are available but not being produced, has been the buffer that's kept crude really well contained, even while geopolitical risks have increased. We're kind of sucking those down out of OPEC as they bring the barrels to the market, and it leaves the commodity a chance to really rally in the latter half of 26 and into 27 when non-OPEC supply is decelerating. So it is the long game, and I think they acknowledge that it might be a little painful into 4Q and first quarter of 26, where we see, crude kind of flatline like it has in the low 60s or mid 60s, maybe even hit into the 50s if demand falters. But if we've cleared this spare capacity, we've got a good look at some nice price action in late 26 to 27.
That's interesting. A more bullish call than we've been hearing lately. The Can you talk to us about this split in the physical market and the paper market? Because, of course, we normally talk about futures, but we have heard quite a lot about signs of tightness in the actual market for oil for current delivery.
Yes, that's an outstanding point. So there has been this big dichotomy and this kind of binary view of the market. Physical traders are seeing the market as tight because China has been stockpiling a lot of barrels over the past 6 months as OPEC has been unwinding. So they're bringing back more barrels, but instead of showing up in OECD inventories, which are highly trackable and where all the pricing centers are, China's put them away in their SPR. That's left the market where physical traders actually need to source barrels and where they need commercial players need to hedge tight. However, the paper market recognizes that this might be an artificial tight market because those barrels, although not hitting pricing centers, are being kind of stockpiled away and in an inventory, so to speak, that might not be as transparent to the market. So the macro traders or the paper traders are saying these builds are coming. The market might feel artificially tight for a physical guy, but when I look at actual barrels that are in existence, we are oversupplied and will continue to be oversupplied. And that has contributed to the positioning, which has remained very bearish throughout all of 2025 on the anticipation of this surplus coming in 4Q. That doesn't alleviate the pressure for the physical market in the near term. Doesn't matter if the barrels are in the SPR, they're not where you can source them in the immediate term, in the immediate spot market, leaving it tight. So there's this 100% this friction between physical traders and paper traders. And I think that's part of the reason why the range has been so tight. They have vastly different views of how the market is shaping up right now.
Rebecca, thank you very much indeed, as ever.
Thank you.
Rebecca Babin, Senior Energy Trader at CIBC Private Wealth.